Alright, the next lesson I want to take you through is how to do adjusting entries. And I've broken this down into a 5-step process. Prepare a T account for all accounts affected. Record the current balance before the adjustment. Record the ending balance as it should be after the adjustment. Record the adjustment to take you from the current balance to the adjusted ending balance. And then verify that you have a debit and credit for the exact same amounts when you do your journal entry. So I'm going to take you through a challenging example by applying those 5 steps. Okay, an example that it talks about in the book, and I've switched up a little bit, but is related to prepaid insurance and insurance expense. So let's just say we've received a bill for insurance for 12 months for $4,800 on November 1st. So when we got that bill, we recorded it as a debit to insurance expense and a credit to cash for $4,800. Our T accounts would look like this: insurance expense $4,800, prepaid insurance 0. I'm not showing you the cash because cash doesn't have to get adjusted, just the insurance expense and prepaid insurance. At the end of the year now, 2 months worth of insurance has expired. So what that means is our insurance expense should be 2 months worth of insurance from what we paid. And a month's worth of insurance is calculated to be $400 times 2 months for November and December equals $800. What that tells us is that even though right now our insurance expense is $4,800, it should be $800. Prepaid insurance is how much do we still have prepaid for future months. Right now in our books we have 0, and it should be $4,000, which is 10 months worth of insurance. So then the question for our adjusting entry is, how do we go from $4,800 as a debit to $800 as a debit, and how do we go from 0 to $4,000? The answer to both of these is, for insurance expense to go from $4,800 to $800, we would have to credit that account by $4,000. That'll take us down to $800. And here we would have to debit this account by $4,000. So then our checking mechanism is, do we have a debit and a credit for the exact same amount? The answer is yes. So we would debit prepaid insurance for $4,000 and credit insurance expense for $4,000. Now, there's another way we could do this as well. It is possible that on November 1st, a company could have recorded that initial $4,800 as a debit to prepaid insurance and a credit to cash for $4,800. So therefore our T accounts would look like this. On December 31st then, again, we have to figure out what our ending balances should be at the end of the year. And these would be the same as before. Insurance expense should be $800, or 2 months worth of insurance has expired, and our prepaid should be $4,000. These are the same as before. The only thing that's going to change is the filling in of these question marks to go from 0 to 800 and to go from 4,800 to 4,000. And how we get there is, to go from 0 to 800, we would have to debit insurance expense by $800, and then the prepaid insurance, to go from 4,800 back to 4,000, we would have to credit that account for $800. Therefore, our journal entry would look like insurance expense $800, prepaid insurance $800. There's a lot of other examples that they go through in the textbook, but this I thought was one of the more complicated ones because you could do it one of 2 different ways. If you have any questions on this, please contact me.